Kia ora and welcome to the CAN podcast. I'm the host Warwick Slow, and today's guest is Evan Barnes, who's the Managing Director at Funding Partners. Funding Partners are a non-bank lender that sit in that space just outside where the traditional banks would possibly lend to, as well as doing a lot in that development space. Evan's a great guy. This is a really enjoyable podcast. He's funny. He dives into maybe some areas that traditional residential mortgage advisors might not be comfortable in or might not know about. And if you want to catch this episode, we're across YouTube, Apple Podcasts, Spotify, and thanks so much to those that have given us a subscribe or a follow or a positive rating. It goes a really long way to helping us grow and develop and invest in this podcast. But otherwise, let's dive into it. Evan, thank you so much for joining us on the CAN podcast today. It's a pleasure.
Yeah, Warwick, thank you very much for having me along.
Now, Managing Director of Funding Partners, it's a business or an industry that you've been in for a wee while, previously working with FMT. I think you were with what is now called Heartland Bank. What was it like, starting out Funding Partners and making that transition from being an employee to being a business owner?
It was definitely one of those, or the best decision I probably have ever made, but also, scary at the time, taking that big leap. Very much, it was just an opportunity for me to expand and grow what I could do personally. So yeah, I've really enjoyed taking on that challenge and, the opportunity that's brought. It does bring a lot more challenges than, being an employee and getting to see it from both sides of the fence has been interesting, but yeah, very enjoyable.
So starting out, what was the main reason, or what was the area of the market that you saw the opportunity in when you did start Funding Partners with your business partner, Donald?
I suppose I'd hit a bit of a glass ceiling at First Mortgage Trust. Being paid very well, getting good bonuses. We were tracking very well, going through a massive growth phase with FMT, and they've gone from strength to strength on that. But I was probably looking to expand myself more into that management role, where the role for me became very much just carry on doing what you're doing because you're doing very well for the business. So it was just, a little bit Groundhog Day, still very enjoyable sector, but just needed that next step and challenge. So it was an opportunity to partner with some high net worth families and, access other opportunities in the market.
And what have you learned since you started to where you are now? How's the market changed?
Again, we're going through another cycle. So I suppose what I have learned, when I was starting out, everyone said, it's cyclical, but until you see it, you haven't seen it. And now coming through, another round now, it just, it does follow the same patterns and up and down. Currently, we're at the bottom of the market in terms of value, where it has, clearly stabilised. We're at the peak on interest rates, so we are coming into a lot better period going forward. So there's a lot of opportunities coming up, but it always takes a little bit longer on this phase to come through. But everything's looking, pretty positive going forward. And there's always changes. There's always slightly different risks and challenges, but it's a matter of actually taking that time to stand back and have a look at that larger picture as well and understand, from a macro micro perspective of what's going on.
Interest rates is something that every advisor talks about. Like, what are some considerations to make? Maybe when they look at the interest rate that you have versus a competitor, and then taking into consideration, establishment fees, line fees. Like, how does that come into play when considering between two providers?
I know we're going to talk a bit about property development lending later on, so I'll probably save the detail on that, comparison on that development lending side of things. I would say in terms of interest rates, one thing we're seeing in the market at the moment is investors, because of values being at the lower point, maybe looking to, move now at a slightly higher interest rate, knowing that's going to come down and fixing for a period. Some of our products we've got on that near bank, are very sharp and lower than the floating rate with the banks even. So again, it's just a matter of really positioning that. But again, from an advisor perspective, it's all really about understanding what the needs and requirements are for your client, what they're trying to achieve, and then for them to understand the various products out there and where's the best place to position them for where they're heading and what that next step is. I suppose what I've seen a lot is it's not always about the interest rate. A lot of it's really about the terms and, how do you get your client to, where they want to be.
Now, starting the business out, I know everybody has dreams and things they want to do and make changes. I understand one of your dreams was to have arcade machines in the office.
It wasn't at the time, but we have started a bit of a collection of pinball machines up there at the moment. So it's, through a good friend of mine who introduced me to the niche world of pinball. He's got heavily involved in now. Actually, his day job is as a web developer, and he now programs for one of the big US companies. So they fly the machines in for him to program, and they're just a bit of fun. And we've got some older machines from the 80s and 90s, more modern ones, and it's quite interesting to see the different tech within them as well, and all the electronics and how that changes, and then understand from a programming side of things how complex they are. And I always joke to my kids that it's got the best gravity engine of any game.
Well, they're a noisy thing to have in the office. Do you find it's a distraction having it?
You can turn it down, but it's good because, again, it's almost like that micro break. You do need to, in some ways, switch off. You've been working on something non-stop. It's good to have a break, focus your brain in a completely different direction, and then you can come back a little bit refreshed. We know that, you wouldn't play when there's client meetings and bits and pieces, but it's always good. Yeah, it's good for the afternoon. And, Sean, our ops manager, will come in the morning, just have a bit of a game as well. So, it's.
I actually think it would be quite a cool way of conducting the meeting. You have a client come in, jump on the pinball machine, show them who's boss, and then you've kind of asserted that dominance. So then when you walk into the boardroom,
you've got,
they're like,
hop into the high seat. And
Evan's got the high score. This guy, this guy knows what he's up to.
Well, the other thing we've got is the giant Jenga in the office as well. So that's always good for a Friday. And if we're ever doing a Zoom talk and you see the Jenga above where we've got the frosted privacy panel, there's a big game going on in the background.
Sounds like good
You've
fun.
got to enjoy yourself as well. At the end of the day, you want to be in an environment where it's enjoyable. We've got an end goal of what we need to do as well, but at the same time, have a little bit of fun as well.
Got to have fun, for sure. No, I think we've always had a good time. It's certainly any of the CAN events that you've been present at, it's always been a laugh. So I can tell It's a big part of who you are and the culture of the company too. So what type of advisors really you guys working a lot with at the moment?
Look, we work with the full gambit. So we've accredited with all the major aggregation groups. So effectively, Funding Partners is different to a number of lenders that have a single product. So we represent, as I said, some family offices, some managed investment schemes, some what would be like ex-solicitor nominee type structures. We deal with a very large family office out of Australia, and we can access various funds across the board. So my usual thing is for advisors, if it's a non-bank transaction, we've probably got a solution there. We probably don't have all of them, and if we don't, we'll let you know quickly on that. But we can also mix and match between those lending options as well.
Okay, and then for resources for maybe those advisors that haven't used you previously, is it best just to call Andrew the BDM, or is it calling you, or resources online?
So all the aggregation groups have the contact details of who to contact. Andrew's the best point. If it's all packaged up, we've just got a email which is funding@fpl.co.nz, and the team will jump onto that and put it to the right place. So effectively, we'll just ensure it gets to the right people, gets processed quickly, and get that feedback there. Always good to workshop it up, but often it's good for us to have a look at that proposal and
go from there.
Yeah.
Well, the development funding side of things, is that something that you're doing a lot of at the moment?
Yeah, so kicking back into that very strongly at the moment. Partly, as we were talking before about the sector and the cycle of the market, the view being that, well, from a credit risk perspective, and I suppose trying to pass on from educating advisors of why we need this information and what, from a credit and, financier point of view we'll be looking at. Values have stabilised, if not, looking to increase. Interest rates will come down. So from a risk perspective, it's a better time in the cycle for everyone, because basically by the time the product is delivered, the market should be, either stabilised or in a better position, or rates down. So
hopefully.
I'm pretty confident.
You never know, but you got to be.
My glass is half full still.
Okay, and then what types of things, like if somebody came to you, like do you have like a checklist you can provide to them?
Yep. Yeah, so very much so. We've got a checklist on that, and we also realise a lot of advisors that 80 or 90% of their transactions might be with the main banks, and they don't always get development side of things. So we're happy to help and educate on that side of things. We've got checklists of the information that they need. One of the things we often get is the first phone call is like, "What are your rates?" And it's like, that shouldn't be the first question, because rates and fees will vary a little bit on the risk profile of the transaction, but especially with development, or more so with development than anything else, it's more important about the terms, because at the end of the day, you've got to ensure that it works, for the borrower developer to deliver what they need.
And what are, you say focusing on the term side of things, what are some common fishhooks that people may not notice that you think they should look out for?
Yeah, look, the market's a lot better now, and there's some really good lenders across the board in that development space. But historically, there's been a few sharks out there back in the day, with that typical loan to own type approach, or if you need 12 months, we'll give you 9. So there's going to be another fee or another rollover there. Developers are always pretty confident they can deliver quickly and on budget, on time, but we have seen that often. There are a little bit of price escalations, or takes a little bit longer. So always try to make sure you've got a little bit of buffer built in terms of the term. We always look for a bit of contingency. So if there is a bit of price escalation, it's already covered within the funding facility, especially if the developer or borrower hasn't got cash resources ready to top up any shortfalls on that as well.
Nice. And in terms of the relationship between Funding Partners and CFML, what is that connection for those that maybe don't know?
So Conrad Funds Management, we acted for them as their sole exclusive point of contact for sourcing loan transactions in that near bank space, and also doing their loan administration function. So we ran that for 5 years. Recently, that exclusivity has changed, where they've got a BDM on the road now as well, so you can go directly to either party. The main thing I want to say is that the pricing is exactly the same where you go. There's no differential on that. The only difference with ourselves, as I said, is we can also then, if it doesn't quite fit there, we've got some other options, or even cut it up between that and other parts as well. But in terms of the development side of things, CFML don't do development lending. That's through our other channels and other funding partners.
Because I understand there's a connection through a Westpac funding line, right? How is what are some of the advantages or maybe disadvantages about having that type of connection set up?
Westpac, so Westpac provide a funding line to CFML loans, and again that gives them that size and scale. I suppose what's interesting is Westpac also provide a similar product to a number of other lenders in the market. So I would say if you stood back, a lot of transactions from the advisors go in, there's a group of lenders that are in that same space, compete for it, and ends up with Westpac at the end of the day. But yeah. But look, it is a very good solution for transactions that fall just outside of bank criteria for one reason or another.
And in terms of the market, I know you said that you're confident that it's going to be moving in the right direction.
Yep.
Where do you see funding partners growing to?
So a lot more into that development space. I suppose if I really stand back and have a look at the direction, banks are definitely moving more into that AI, computer-generated approval side of things. A lot of the near banks that have bank funding lines will get more into that full credit score side of things. Funding partners is always going to be more on the end where it has more of that human touch and skill set. Like our team, we've got a lot of experience in commercial lending, development lending, more complex transactions, and that ability to marry that. And also because of the nature of our funding partners, it's again relationship driven. So I suppose it's that balance where tech will come into it more and more, but our position is definitely more around higher skills and people and relationships.
It's where you sit in that little niche, I guess.
Yeah.
And what's your top score on the pinball machine at the moment?
They vary on different games, but had a really good run on Twilight Zone the other day and got a 1.7 billion, which I was pretty happy with.
I have no scale, but it sounds impressive. It's a big number. Spent some time overseas. How do you think that helped and shape your career and who you are as a person?
So when I was doing my OE, I was on the tools, so I've got a bit of a building construction background. So I think that's definitely helped, especially in that development lending space, knowing how things go together. Getting out of New Zealand and seeing the big wide world is definitely an eye-opener, just in terms of size and scale and opportunity. At the same time, New Zealand's an amazing place and love being here. And it's also some of that growth. And I suppose when you look around, the main thing we really need to look at is probably the quality of some of our build and the stock that we're creating out there, just to make sure it's more of a livable city going forward. We definitely have some planning issues at the moment and around infrastructure spend and things like that. So look, it's not a complete basket case, but it's just not coordinated as well as it should be.
I think that's just New Zealand as a whole just hasn't had. We haven't been a rich country, which seems crazy because I'm sure if you looked at like the average GDP per person would be right up there per capita, like we are for most things. Thank you, the Olympics. But I look at the housing stock, having lived in London, and you're staying in sometimes some pretty questionable places, but in winter they're warm, all central heating, insulated, double glazed. And then you come here and you could spend the best part of $1 million on a 3-beddy anywhere in Auckland, and wintertime, it's cold.
It's just because we've got that positivity. It's like, we'll build for the summer and summer will come.
Yeah, it's I see it a lot of the time with different developments. You hear the horror stories of just buildings that have been put up. Obviously, you've got to make a margin on it, so corners are cut, and we sort of go through this vicious cycle of the properties maybe not being up to standard. I know not everybody's doing it, but for instance, I see one. There's many around where I live, and there's one that I drove past the other day, and you see already the flashing on around one of the windows is just rusting, and there's just like this big teardrop of rusty water coming down the side, and they were built within the last 2 years. This is probably just less about lending, but what controls are put in place to make sure that type of shoddy workmanship doesn't happen?
So a couple of things on that. So just a quick aside. One of the things is often around that design, like there was a period there where apartments were, very much seen as a shoebox, very small. So banks put controls on the size of apartments they'd lend on, so that if, had an influence on the market. Also the very high density stuff that's been produced recently, trying to get the most onto sites with all walk up, no car parking, and if they're away from public transport hubs, there is a risk in the future that banks and lenders won't lend to as high an LVR on that stock as well. So I suppose you've got to be careful on that. So if we're funding developments, we're also want to have a look at that design and bits and pieces. And as I was saying before, we've got to live in the city as well, so we don't want to be funding things that are terrible. In terms of quality, look, that's a lot of checks and balances. So it's ensuring that you've got a good builder, good materials, and they're not just cutting all of the corners. Look, there should be some remedial things for the people that now have those properties, but it's difficult. Sometimes corners will be cut and quality will drop.
We all know in any type of building site, anyone who's done any renovations, you'll know that the deadline that you've got seldom gets met. And when you're pushed to get to that deadline, and you've got clients who are putting the developer under pressure, they just want to get a result. And sometimes cutting those corners can mean I just feel like we go through a bit of a vicious cycle with it. But I hope that the overall standard of property increases in New Zealand, because it's still still poor. Just think about like growing up my flat in Wellington, and my first ever flat, which was up in Kelburn in the hills, and it was just terrible. And it had my room, which was huge, had this tiny window that was probably about the size of a A3 poster. And I stayed there over summer for about 6 months before moving to another place. And I remember pulling stuff out of a wardrobe when I was moving out, and it was covered in mold. And I'd come from living at home, and I was like, okay, this is a good lesson. Get a dehumidifier, use it.
But you hear those stories. I didn't go to Otago, but all the Scarfy flats down there, you hear the stories of everyone just, huddling around the heaters, and I don't think that stock's got much better over the years.
Still warming the house up with the oven door being open.
Yeah, that's sufficient.
Yeah. But thanks so much for coming on the podcast, Evan. And I know that we've got a great relationship through Can and with Funding Partners, and
I've enjoyed that.
Great to hear some of your insights in terms of how how Funding Partners is growing, the origin story, where you're going, and the types of advisors that you're working with, the types of deals you're doing. If there's anything else you're keen to discuss.
Yeah, so just jumping back to, I parked about the interest rates and fees and that on development. So I suppose the main thing is ensuring you're comparing apples with apples. So when you're, borrowing or, lending on a development, there's basically three price components. So you've got the interest rate, you've got the establishment fee, and you've got the line fee. The line fee, may often be charged, at a monthly rate. So maybe, 0.2, which will equate to 2.4% per year. And often that's over the entire limit, even if it's not drawn. Sometimes it could be over the undrawn limit. So often you'll look at that headline rate and, one lender might be 8.75, another lender might be 9.5. But then once you put all those other parts in and look at the S drawdown curve on a project, it gives you a better feel on where that really is. So often people just focus on that headline interest rate, but don't see those other bits and pieces. And then, as I said, ensuring that everything's set up correctly, that the agreed method for progress payments is there, because the worst thing that can happen for a development is that a lender doesn't process a payment because there's a disagreement on that structure. So getting everything right up front is super important. Often there's a bit of resistance about having a quantity surveyor involved, but look, they're there also to protect the developer, because often they'll get a build price, but that misses the front end around all the consenting and design works and misses the back end around the landscaping and contribution side of things. So it's just making sure everything's in place, that the contract's not too much in favour if they've got a external building party. So there's a lot of other nuances that come to it, and again, it's just making sure you get the right team around to ensure that works well.
So if an advisor wants to chat and reach out and work with anything,
always happy to talk development. Yeah.
How do they find you?
So as I said, we're with all the aggregation groups, so Funding Partners will be there and all the contact details. Funding Partners online, give Warwick a call, give Andrew and the team or myself, just reach out. We're easy to find.
And do you give preferable interest rates so somebody can beat your high score on Twilight Zone on the pinball machine?
I'd like to see them try. No. Always keen. So we're also really lucky. We've got a nice office up in Takapuna. We've got a nice rooftop bar up there. So always keen to, host if people want to come over and have a chat, just a general catch up, meet the crew. Always open to it.
Love it. Thank you so much, Evan, for joining us today.
Really
and I can't wait for that rooftop beer.
Come up soon.